Okay. Good morning, good afternoon, good evening, depending on when you're watching this video. All right. In our last video I talked about how you can register on my broker, how you can link your account with MT5, be it demo or be it live account. And I said in our next video we're going to be talking about the trading terminal himself, that's the MT4 or the MT5. Okay, we have the MT4, as you can see here. This is the MT4, this is the MT4, and this is the MT5. So without wasting much of our time, so let's quickly take a tour through the MT5 and see what we have there. Okay, all right, okay. Should we switch to, okay, let me use this one. All right, as you can see, here you see the quote. This is the quote. When we're talking about quotes in the MT5 trading terminal, we're talking about the currencies you can actually trade. So this is where you're going to be seeing all the currency pairs you decide to be trading. For example, okay, let me open my other account. Okay, I think we have a demo account we use for this. Let me open the demo account. All right, so yeah, as you can see, quote. So this is actually the currency we added that last time during the live when we were talking about how to register this, and so I think we actually delved into this, but we didn't go in details. All right, so this is where your currencies you're trading are going to be showing on that quote. All right, you can add anything you want to add. As you can see here, we have this plus sign. If you want to add it, you just click. Let me add euro USD. Click on spine symbol, euro USD. As you can see, I've added it, and go back. All right, as you can see it here, we have euro USD added to our watch list. Okay. Okay, that's for that. All right, and you see where they wrote you see this pencil sign here. That's when you click it, you can actually use this sign to add or to delete. Okay, let's remove this euro USD we just add and add pounds USD. Okay, so click on delete, and you can see I click on the euro USD, I delete it, and I had pounds USD, that's GBP USD. All right, click on it and add it. Okay, you can see it's showing here already. All right, so we have chart here, charts. So when you click on charts, what you'll be seeing on chart is actually view of the market. Okay, that's the view of the particular currency we're talking about. Actually, this is chart for SAU USD, that's good. Okay, and this pounds JPY, that's a British pound versus Japanese yen. Sorry, let me bring it out again. New chart. All right, so that's chart. That's where you can see the chart. And like I said before, I said we have some people that do their analysis on. We have some people that do their analysis on MT5. But for a person like me, I cannot do my analysis on MT5, so I rather go to my trading view. We have the trading view here. I go to my trading view, I analyze my charts, and I go back to my MT5 and I place my trade. And my trade is actually my MT5 is actually linked to my MT5 is actually linked to my broker. So any trade I'm placing on my MT5 is actually showing on my broker. Okay, so as I was saying, this is the chart for any particular currency you decide to trade on. Okay, and as you can see over here, we have some tools and stuff over here, but I won't advise you to be doing your analysis on MT4 or MT5. So MT4 and MT5 are used for what? Taking trades. Okay, if you want to do analysis, get Tab Trader or get trading view. I think trading view is more popular, so get trading view and start using it for analysis, and come back to MT5 and take your trade. Actually, in my next video we're going to be talking about trading view. We're going to be talking about trading view and some stuffs. Okay, I told you guys we're going to be taking it gradually. Okay, so actually this is the second video I'm going to be dropping, which is talking about how you can use MT4 or 5. Okay, MT4 and 5, they're actually the same thing. The only difference there is the user's interface. Okay, so trade. Actually, I have a trade I'm taking currently on AUD USD. That's Australian dollar versus US dollar, and you can see I'm still in profit. So, and still running. Okay, so on that trade you can see some trade you've taken. I'm sorry, your current open position. That's what you're going to be seeing on the trade. And when you click on history is going to be showing. Actually, this is a funded account which I got recently. So this is my first trade I'm taking on this particular account. Okay, so history. Okay, when I for those that doesn't know what a funded account is, that's a pro firm, a proprietary firm. That's we'll talk of a company that they fund you to trade for them. Okay, you trade their money and you make profits. You guys split the profit. So this is a pro firm account. You can see there is nothing in my history because I still have just this is the first trade I'm going to be taking, which is open trade. So it's still open, the position is still open, not closed yet. If you check my history, nothing is in my history because you will only see something in my history only when I've taken a trade and I've closed the position. Okay, so let's go to some terminologies when you're trying to place a trade. Okay, let's go back to the demo account. All right, DFX demo. Okay, so now we are in the demo account. Let's make use of AUD USD, for example. New. Okay, you can see new order here. New order means you want to place a new order. If you click on chart, the chart will open where you'll be seeing a lot of candlesticks and these properties. All those ones we don't need it. Okay, so let's enter new order. All right, here you can see we have market execution. All these things here are actually lot size. We have this is the bid and ask price. We have here is where you're going to put your SL. Here's where you're going to put your TP. When I talk of SL and TP, I think I'm going to emphasize more on it when we talked on trading view. Actually, SL means stop loss. TP means take profit. Okay, that's where you are taking your profit, and SL is if market is going against me, let my position close at so price. All right, okay, now if you click on this on market execution, you're going to see that you are going to have some more stuff here. So we have market execution, buy limit, sell limit, buy stop, sell limit, buy stop limit, and sell stop limit. All right, all these things are what I'm going to be explaining to you guys, and I'm going to explain it on trading view. Okay, all right, now before we proceed, let's take it from the market execution. You can see market execution here. Now when you want to take a play, you want to take another, and you are seeing it is at market execution. Now what they mean by that is that if you are clicking this button, buy or sell, it means that you are buying that market, you are buying that particular currency or selling that particular currency at the current market price. Either you are buying or selling means you are buying it in the current market price. Okay, what do I mean by that? Let's go to this trade. All right, as you can see, this is the trade I'm currently in, AUD USD, as you can see on my one of those accounts. So all right, now you can see that the current market price of AUD USD is at this point here, right? This line here. Okay, let me make use of this. can see this is 0.65504, right? So now, and you can see that okay, we are talking about market execution. So if I click buy or sell now, if I click buy or sell, means I'm buying the market at this particular price, the current price of the market. Are you getting me? So that's for market execution. So when we talk of buy limit, now buy limit is simply talking about let me make use of this. Okay, buy limit is is a situation whereby, let's say the market is moving this way. All right, okay, let me do it this way. We have a let's say a support line, and market is moving like this. Are you getting me? Retrace and it break above like this. Now, and I know that because market move in what, in zigzag. So what I will do is that I'll put my position tools, this one, my position sizing tools here. As you can see, my target is to take profit here, and my SL should be what, below my zone. I'm just using this as an example. Now you see that currently the price of the market is actually away from the zone which I wanted to enter this thing. So in this situation, I can use buy limit. To take this market. That's whenever the market gets back to this place, even if whether I'm online or not, they should automatically open a position for me. Are you getting me? They should automatically open a position for me. So what I'll just have to do is I will go to my MT5 buy limit, and I'll put price. Now where I want to buy is I'm interested in buying the market when the market retrace from here now and retrace back to here. Let me use parts from here, and it retrace back to here. That I want to buy the market from here and take it here. So that's the plan, right? So all I will have to do is go back to my MT5 and input this value here, this one here, this place, this green value, this one here, and I will input it in my price here. That's 58199. That's 0.58199, and my stop loss, like I said before, that stop loss is what, okay, you know that sometimes, that's why we say market forex trading is 50-50. okay, you play with is a game of probability. So market can actually reach here. Okay, market can actually do this, can actually come from here, reach here, go up a little bit, and decide to break downward. And imagine your position already triggered from here, and it keep on going down, you make a lot of losses. So that's why we have stop loss. Now stop loss means that for example, from here, from this place now to this place, might be just loss of $10. Are you getting me? I'm risking $10 for, let me check the risk to reward ratio. Yeah, okay, this 47. Okay, let me just say this is 4:1. So let me say I'm risking $4 here to make $40. So in a situation whereby market doesn't go in my favor and it break below to this point, instead of me losing huge amount of money, I will only lose that my $40 because my stop loss is actually here. Are you getting me? So that's the essence of stop loss. So it's actually necessary. If you are trading without the stop loss, you will not start trading, because it's just like you are opening all your funds to the market. and anything can happen. So I'll go back to my chart and I'll put my stop loss, and my stop loss is 0.57723. so here is where you're going to put it. Here is 0.5 what 577223, and my take profit is don't forget to say our target is here. Our target is here, which is 0.6247. is 0.6247. So that's for that, and I'll place order. As you can see, market is actually open, so you can see it here, buy limit. My order is there. If I go to my broker now, you see that this order I placed here will be showing over there. All right, it is actually a demo account, so let me delete the order and let's proceed. Okay, so we are still talking about, we're still using AUD USD. All right, the next thing is sell limit. Sell limit is actually inverse of buy limit. For example, like this trade I took now in the morning, this morning or yesterday morning, as you can see, the market actually just broke. The market go up and it broke below my support, this yellow zone here, to this point, and I place a sell limit order, and the market to retest at least here before it will start going down, and that's what is actually happening right now. So I use sell limit order to place my order, so even when I'm not around, I'm not online, not checking on my charts, once the price gets to that point, I place my sell limit order. The market automatically triggers. It automatically triggers my entry, and opening a position for me. Let's check from the live account. The live account, as you can see, trade, we have as you can see, we have SL here 66926 and TP 62479. so that's for sell limit. So sell limit is opposite of buy limit, just like this trade now in particular. This particular trade, as you can see, I already drew my this thing out. I expect the market, as you can see, I expect the market to go up before it will come down, before it will start coming down. So that's my expectation. And before I leave this chart now, I'm going to go back to my trading terminal and go and place the order, where here is going to be my entry, my stop loss is going to be here, and my TP is down there. I will wait for the market to do what it needs to do. Okay, so I have my own way of trading the financial markets. Okay, let's proceed. Okay, so sorry, before I go and make a mistake and go and place a trade I'm not supposed to place, so let me go back to the demo account so that will be safe. Don't forget, demo accounts and real accounts are actually the same. The only difference there is that with demo account you cannot withdraw the money, but in real account you can withdraw your money straight to your bank account and spend it, touch it. Okay, so let's proceed. AUD USD, new order. We have sell limit, we have buy limit. Okay, the next one is this buy stop. Now we know that firstly, when I said something of buy limit before. Now buy limit, when I talk of buy limit, this is what I said market is moving high, and market just broke this support level, this area, and you're waiting for the market to retrace back, right? To retrace back to this place before you take the buy. That's, you plan to take the buy from here, from here to here. And don't forget that when market broke from, move from here and broke this line, this black line here, and broke it to the upside, that's when you saw the market, and you're waiting for the market to pull back to this place, and you use the buy limit order to take that. That means as the price broke above your support, you waited for it to come back to your zone, and even though you're not online, you make use of buy limit order, and when the price retrace and get to that point, it will trigger and start moving upward. So that's for buy limit. Now buy stop is a different scenario. Now buy stop means let's say the price is actually currently at this area here, and you know that the market will surely break above here. You can use buy stop. That means you are buying at higher price. You know that buy limit, you decide to place an order in a, that's when the in the premium zone, let me say premium, that's in lower in discount price. That's when the markets move up and you expect the market to retrace back to here before a position is automatically open to you. But here in buy stop is a different case. Buy stop means immediately the market is passing out from that zone, from that your support line you drew, means that the market is automatically buying the market, opening a position for you instantly. So once the market moves from here and reaches that place, bam, another will be open for you. A position will be open, created for you. So the same thing also with sell stop. Sell stop is the inverse. Sell stop is the inverse. Okay, sell stop is the inverse. That's let's say you want to sell and market reach here range, and you know it's going to break below here, and then you decide to put your sizing tools here, that you want to set the market to this point, and you use a sell stop. Means whenever the markets move like this, immediately the market broke here, bam. Let me redraw that. Immediately the market broke below, beam, this particular area here is going to automatically buy and sell, open a sell position for you. Sorry. So the market is automatically going to open a sell position for you. And don't forget that in a sell limit, we wait for the market. As market break below, we wait for a pullback, market will buy. But here in sell stop, as it's breaking, is buying directly is selling for you directly. Okay, hope you guys are getting what I'm trying to say here. All right, so let's proceed now. Here in we have two other ones here, which is the buy stop limit and sell stop limit. Now buy stop limit and sell stop limit, buy stop limit is the combination of buy limit and buy stop, while sell stop limit is the combination of buy stop and sell stop. Although it used to confuse people a lot, but actually it's simple. Okay, so let me explain it for you guys in a way you guys are going to understand. All right. This time around, I'm going to use a box as my zone, my support zone. Let's say we have a support zone here. This is this is a resistance. We have a resistance here, and the markets move from here. We are talking about buy stop limit. Buy stop limit, right? Now buy stop limit means hold on please. All right guys, let's proceed. Now buy stop limit means that the market is, you already spotted the market from here. Let's say this is it. Okay, and the market is moves, break support, break resistance turn support, and you know that the market is actually going to break above, it's going to break the support. Now all you need to do is is use a buy stop limit order. Now what that means is that you know that this market is actually below. Now when you want to use a buy limit, you are using buy limit when the price already broke above where you want to enter. Buy limit when the market already broke above where you want to enter, so which means the price is higher than what you intended to buy from, so it means you are using buy limit, and when it retraces you buy. Then sell limit is the opposite, which means where you intended buying before, the market already gone way below it, so you have to wait for it to come back and use a sell limit to take it from that place you want to buy, which is a lower discount compared to when the market is still around here. Okay, so now when we now talk of buy stop, I'm trying to make a recap here so that you guys can understand. Buy stop now means the market is still below. Let's say the market is moving, market is moving, it's still below where you, and you want to enter from here, means you already place your position sizing tools. You already put it there that you want to enter the market from here now, and the market is way below here. So as the market is moving, you use the buy stop. Once it break above, like you are buying at higher price than the current price. I don't know if you guys are getting my point there. Why sell stop means you are buying lower than the current price. That's let me make another example here. That's the market is actually below. The market is still here. Maybe let's say the market just break this support and it retest, and you want to sell. The market. So, and you know that the market will surely break below here. So sell limit means that where you want to enter is you want to enter a lower price than the current price. Why buy means you want to buy you want to enter the position, you want to open a market when the market is higher than the current price. Okay, let me put it that way. So when the market break below here, is going to actually buy the market for you, open a position for you. So that's for the buy. Now for this for this buy stop limit, I know it's kind of confusing, but if you can rewatch this video, you understand what I'm trying to say here. So for the buy stop limit, now it's just like this. Now let's say the market is below, and you're waiting for the market to, the market move from here, reach here, retrace, break above, retrace, break here, reach here, retrace to this point. And once the market break above, you know that normal buy stop, once the market is breaking above here, it's going to automatically buy, but this won't do that because we have buy stop limit. Buy stop limit means once you break here, you already place this order when the market is still below here from your trading terminal. So when the market broke above, it's until you retrace back to this point before the position will be open for you. Do you get me? The same thing happen when we are talking about sell stop limit. You understand? You are opening you are placing an order before the market reaches that side, like this. Now let me remove this. Let's say the market now decides to start going down. Now when the market is still around here, you already place an order that if it break here and you now decide to use a sell stop limit, means the market will automatically break here. Once it break here, it must retrace back to this point before they will open an order for you. Not like sell stop that we automatically buy once the market move from here and break here, and once it reaches here, it will automatically buy. You see, that's a different case. That's a different scenario. So in this scenario, the market move break above, I must retest before they will buy it. And don't forget that you are placing the order when the market has not even reached that level. That's for a stair stop. Okay, I think with this few explanation, you guys should get what I'm trying to say. And if you don't understand it, try to watch and watch and watch again. But what you just said is that when you start getting deeper into trading, you understand all these things I'm trying to explain. Because to some of us, it's going to be looking like a new thing to us. Okay, so any other thing? That's all for now. So let's check again. So those are the terminologies you need to know about some of those things. But before we go, I would like to talk about we have something we call base and quote currency. Now, for example, if you check my this user interface of trading view, okay, and here is my watch list. You can see forex pairs. So if you, as you can see, let's make use of pounds JPY. For example, we have GBP JPY. The GBP is a short form for British pounds. That's a British pounds dollar. What am I saying? Sorry. This British pounds, and this JPY means Japanese yen. Okay, so now I think when we dive into forex, we talk about that. Okay, we elaborate more on it. We have something we call base and quote currency. Now, between these two I'm talking about here now, we have GBP and JPY. Now, the GBP is the base currency because it's what we are using. We are buying or selling against Japanese yen. So JBP is the base currency and JPY is the quote currency. Now, what I'm trying to say is that now you need 184 Japanese yen to buy 1 pounds and 1 British pounds. Do you guys get my point? Okay, let me make use of AUD USD. AUD is the base currency and USD is the quote currency, which means 1 Australian dollar is like you need 0.655 USD for you to buy 1 Australian dollar, which currently is way more stronger than AUD USD. I know this is confusing, but I think in our next video, when we're going to be talking about diving full into forex, then we're going to be talking about a lot of things, and that's where we're going to talk about lot size and other stuff. Okay, I think I jumped something. AUD USD new order. All right, here now. What's that? New order. As you can see, I said something before that all these things here are your lot size. The lot size you are using, the leverage. Okay, lot size, we have the lowest lot size you can actually use on most brokers is 0.01. That's the lowest. Then we have 0.02, way more to to infinity. Let me just put it infinity, although they have maximum range of lot size you can actually use depending on the brokers. Okay, so these are the, when you want to change, let me say I want to change my distance to 0.3, 0.31, all these things are just different lot sizes you can use. And don't forget that in forex, the higher the risk, the higher the profit. So, and also it's a 50-50 game. Forex can save your life, can turn you to a billionaire, a millionaire, and it can also send you back to a village. That's why we have a lot of things to talk about. So this is just the summary of MT5. Okay, actually the theme of this thing is MT5 and MT4. So let me just open MT4 and you can see for yourself that MT4 is actually almost the same. It's just the interface that is just different. As you can see, the same thing, just the user interface that is just different. User interface, that's what is different here. As you can see, so they are the same thing, just the interface that is just different from each other. Okay, I think this is how we are going to stop today. Okay, thank you very much for watching the video. See you guys next time. Have a nice day. Thank you.